We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back everyone to the Capital Mindset live show. It's been about a week since our last one, so we haven't had too much of a hiatus this time. And a lot's happening. People are panicking. Andrew's definitely panicking. I can tell you that behind the scenes. He's calling me all the time and he's saying, it's like, oh my God, I'm getting margin called over here. I'm off sides. And he's totally not having the time of his life. He's totally not, jumping in and saying, hey, these retail shitcos that we're short are down another 10, 20 or whatever it is percent they are on a day. It's not happening. Those are lies. The truth is he's freaking out. And I think he's ruined. I don't think he'll ever financially recover from.
So if people remember from the voice chat today and the Discord, I was actually crying and I had to have some people console me.
Yeah.
Fabio came in and said, "It's okay, Andrew. It's only money.
It's only money.
It's only money.
You'll make it back in 100 years.
I mean, it's only your wife. You'll find another one.
Yeah.
And
So,
you'll make another daughter."
it's getting darker and darker. That better be alcohol.
They left me, not that they died.
No.
They just left me.
They didn't die. They just left me.
But no. But do you want to summarize what's happened today or what's going on?
Yeah, so I have a section where we'll talk macro and all that, but this first segment is about retail hype stocks, just different opportunities that presented themselves to be short, whether or not we still think it's a good time to be short. We've already talked in the last 3 or 4 live streams that even though it's the top was like February, mid-February. It was still a good opportunity to continue to short some of these absolutely disgusting names. So
Still think it is.
You still think it is. All right. So that covers that segment. I thought we were going to talk about this for 30 minutes, but
Well, I mean, we can get into why, but yeah, I mean,
yeah, let's get into why.
Because so many of these companies are still fundamentally overvalued. I mean, some of the companies I'm shorting, any valuation above 0 is overvalued. But like, I'm just, if you want to take a step back and think about it, one of the things, and I think I've referenced this before, is that Paul Serro, I think it's Cedar Oak Research. He's on Twitter, and he was talking about him shorting HIMS, and a lot of retail people were saying, "Oh, it's a multi-year hold," and XYZ, it's a go to hold here. And this was when it was at like $70 almost, or like maybe it was the first drop to 60 or 55. And he made a good point. He said, the issue is that a lot of retail doesn't know how to, they haven't been taught and they don't know how to do valuation. And so they buy a stock, and because the stock has gone up, they hold the stock even when the stock is extremely overvalued. And retail flows matter. Retail flows definitely can influence stocks if you get enough momentum behind them. And I think momentum strategies have also been levered up. And now momentum strategies are unwinding, which is affecting these stocks. So I don't know HIMS that well. I never really have actually analyzed it, but let me just look on a quick. If I remember right, aren't they forecasting 0% earnings growth this year?
Something like that. Let me also confirm. But I'm just looking at the chart now. I'm like, damn, I covered too early. I'm a clown. This one was one of the more fun shorts because there was so much like retail regardation.
Yeah.
Around this online.
At the time, when it was at 70-ish, it was trading at over 70 times forward earnings. I think it was like, it wasn't a very impressive forward guide. It was like, I want to say their revenues are going to increase, but their margins are going to decrease, is what they were forecasting. Like I said, I don't follow that closely. This is not a company you should be paying 70 times earnings for. I'll tell you that straight up. Like, this is a company you should be paying kind of a cheap discount for. Some people would argue scale. I would argue they have there's no moat. The only moat they have is a customer list. And like, I wouldn't consider that a moat. And I don't think this is a high quality company. I mean,
Yeah,
all that happened was, did you see, was it Novo Nordisk that came out and was like, we're going to start shipping Wegovy to you directly?
I believe so. It was also
Yeah.
the judge siding with one of the pharmas. I think it was, who was it? Merck or Eli Lilly? I want to say Eli Lilly, but I could be wrong on that one. But anyways, regardless, it sided with the pharmaceuticals on listing the GLP-1s still or maintaining their shortage status.
Yeah, and I just remember looking at this, like this, and so many companies like it, and going, this is a cracked valuation. Like this valuation, like this is a valuation. I think it was trading at a similar multiple to, as an example, and I reference this company a lot because I think it's a very high quality, extremely high quality company. Is CrowdStrike. It's trading at a similar multiple to CrowdStrike. Right now, CrowdStrike. I mean, I'm not in it. I was in it a while ago. I sold off, or I sold out a while back. But I mean, these are like completely different kinds of quality of businesses. What's another one that I could look at that? It's funny because most of the things I'm short were not these companies. It was like the the dog shit. Like we can talk about Applied Digital if you want for a quick second. This is
Another one.
This is a company. Yeah, I'm still short them for whatever it's worth. Remember, and people, this is not just us BSing, because BSing happens all the time. I was like screaming at Fabio to short. You see that line up? I was screaming. I was like, dude, this is a short squeeze right now. You got to get in right now. This is a company that, in my opinion, will not get a contract with a hyperscaler. If they don't do that, they will be bankrupt by the end of the year. So equity holders will have zero by the end of the year if this company doesn't get a hyperscaler. And it was not priced for that. I mean, you're talking a $2 billion valuation when we were going short on a company that has literally, and by the way, this is a company I found through the Friendly Bear on Twitter. He was the one that I discovered it from. So shout out to Friendly Bear on Twitter. But basically, you know, I've done a lot of work on it, but this is a company that's been saying for a year and a half, it's like, oh yeah, we have a hyperscaler, we have a tenant. They're 90% of the way there, guys. They're going to sign the contract. There was some road bumps, stuff's going on. They're going to sign the contract. This is going back to January of last year. They're saying this kind of stuff. The January earnings report, April, August, October. Finally, this January earnings report, they come out and say, well, now we're talking to multiple people. It's like, oh, so it's kind of like, oh yeah, you know, dating this girl. We're not official yet. We're not official, but we'll be official soon. And the next time we talk to the guy, yeah, I'm talking to a couple girls. So, so what happened to that other girl you're talking about? Oh, yeah, it doesn't matter. But in this case, the girl that you're talking to is what you need to get a $5 billion loan. And if you don't get that loan, you're going bankrupt. And your CEO is selling his shares. Your CEO's hedge fund is selling their shares. Your CEO is an ex/current B. Riley executive, which
that's a very reputable firm that you definitely want to be associated with.
Yeah, it's definitely not. And so this is just one as an example. So, but like another one we could talk about, like very similar situation.
Can I pump my AppLovin short?
AppLovin.
F this company.
All I'm going to say to people, and I keep on seeing retail. It's still showing Applied Digital. I don't know why. It's still showing Applied Digital, but that's
weird.
I have said this before. I think I said it on the last stream, didn't I? I said it on the last stream. Short report that came out is materially accurate from what I understand. And so look on a 5-day chart. If you shorted when we were saying like that short, go to the 5-day chart, because that was how long ago we streamed, right?
Yeah.
we told you back then, like, this is going to go down. It's high beta, rich valuation, serious question about the legitimacy of the money that it's getting. So what I'm saying is, there's all these people out there. They get into finance, stock market, all this stuff, and while the stock market's going up, they do what is legitimately, and I'm not going to use the word that I want to use, but I'm going to say regarded. They do regarded shit that doesn't end up giving them regarded results because a rising tide lifts all boats. The market comes out from under them and they get destroyed. And more importantly, because they're making money off of you, more importantly, the people that are following them are getting rugged. I mean, there's so many examples of this, like most, if not all of these YouTube finance channels. And some people are like, wow, you're really mean for like saying that. Well, fuck them, because they are destroying people's financial future. You have a problem with us making fun of Kemmer? He's literally right now about to lose his account, and multiple people that followed him are about to lose their account. You want to get mad at Jeremy, like that malicious fuck? No, he is literally just making sales. He doesn't make money off his account. There's multiple examples of this. And so don't listen to those people. Look at how someone does in a bear market if you want to know how someone actually, if they know how to invest. Don't look at them when they're saying, oh, look at my account year to date because the stock market's up 15 and I'm up 40. If anything, that should tell you that they're taking on too much risk.
Don't mistake genius for leverage.
Yeah.
Is the old saying.
Yeah. And we have seen a lot of accounts. We were joking about today. There's a lot of leverage unwinding on retail.
Yeah. I mean, hey, look, let me revisit this, because in February, right? Weekly call that we do for our members every week. What was discussed? The setup. And here, I'm just going to go ahead and get it. Give me 2 seconds, pulling it up. All right. And we'll go right to the section where I discuss this. Here it is. Okay. So I showed this like 2 live streams ago or so, but this was the weekly call, 2/19/2025, playing defense and shorting beta. So in this section of the weekly call, because it's about a 2-hour discussion or presentation, here I'm basically discussing the setup with leverage. And this is publicly available data, and why, among other things, this was one of many other reasons why it was an interesting setup to play defensive and short beta. And what Andrew was just describing, the unwind, well, look at where we were, and it's going to be interesting to look at how this data progresses and look at where we will be and how that looks like.
Can you find an updated chart on that, or is it only updated monthly?
I believe, let me see if this one,
because I'm wondering if some margin from retail, because this is retail margin, right?
Mm-hmm.
Yeah.
Yes.
I'm wondering if some is unwound or if it still has to come.
So it looks like it has. Oh yeah, it's already come down a bit. No. Sorry, it hasn't updated yet. My apologies.
Okay.
Yeah, it hasn't updated yet.
It's a monthly update.
It hasn't even given this website, at least this source hasn't even. Yeah, they haven't given past January. So it was likely even steadily increasing through February. And so we'll see what February is soon. But yeah.
And also, this isn't the only form of leverage. When we talk leverage, we also talk levered ETFs,
yes,
call options. Remember, we were having record amount of 0 DTEs, which is, in fact, just to talk about this, there's a really good Twitter account. Ben Eifert. So Benneneifert.
Uh-huh.
And he's a volatility trader. And he was basically saying that the insane amount of zero DTEs bought by retail has actually allowed it's not like free, but almost like free positions for institutions to take the other side and then hedge it instantly. And because of the amount of like zero DTEs and the amount of dislocation that's causing from retail, they're able to like very cheaply buy the counter on that and then hedge it immediately and like almost make money right away on the on like the margin. So it's just one of these situations where like it just showed how much speculation, leverage, regardation
Regardation.
was
Yeah.
in the markets.
Yeah.
And to be fair, like you and I were talking, this was our talk going into 25 was like, this doesn't feel like this was like echoes of 21 to me, or 20. Yeah, 21. And not saying I don't think that this is 22 for whatever it's worth.
No.
It could become that in terms of if we do get a recession, it could hit the stock market fairly hard. But I think 22 was actually, I don't think we're ever going to declare it a recession, but I think it was actually a recession. And I think you get a recession with high inflation. And I don't think, well, you can kind of see it. I mean, look at how much these mega cap, super high quality companies, their earnings got hit in those years. So
Some more than others, but yes, generally like there was a bit of a dip for some of them.
Mhm.
Yeah.
Mhm.
And we'll kind of see how this shakes out. We're going to talk about this more in the macro section. We'll give our thoughts on where we are at the setup there, but just looking at just back to these retail shitcos. There's still, I think, a lot of optimism in some of the contra signals, to be honest. And I've been trying to jump back and forth, and Andrew's been reeling me back. Every time I have a shred of optimism, he shares with me some idiot on Twitter, and he's like, "Look, this guy's bullish." I'm like,
Which, for whatever it's worth, I think is just noise. I think retail or like these different accounts on Twitter, there's some signal there when they're all hyperly bullish. I think that's signal. But when I think when like they're some are bullish, I think it's kind of noise. But I know
yeah.
that's how I can convince him to stay in.
Well, to be fair, the shorts that I think now, because I'm no longer short Hims, I'm no longer short Palantir for a while now. Regretfully, actually, because I was almost like a
Yeah.
trophy short. The shorts that I'm still in are probably like we were talking about zeros. So it's not.
Yeah, they're nice because the ones that we're short, they're both idiosyncratic in that I think regardless of the market, they will trend down at least 80% for the most part.
Yeah.
And then also very high beta. And so you're going to get that reward if the market sells off. These high beta names will get clapped with the other ones. There's a lot of retail factor there too.
Yes. Yeah.
So.
Well, actually, yeah, and one of them just collapsed today. And then it looks like, from a technical standpoint, they're all terribly weak. Like we were talking earlier today, the support is significantly lower than the current price.
Oh yeah.
And we saw continued weakness after hours. We'll see what happens, tomorrow morning. But kind of, I guess we'll circle back to what we're buying in the next section of the live stream, because I have specifically a section where we're going to be talking about what themes we want to be long. And we'll talk about if we're buying right now, because I think that's a question some people might be having. It's like, okay, well, all this bearishness, because we're starting off with bearishness. Are you bullish at all on anything? It's like, we'll get into that. But
yeah, we will.
As far as, kind of like the other parts of, let's say, huh? What happened?
Guess who just had a bunch of 144s come through?
Who?
IonQ. The Peter Chapman, he's selling his shares.
Oh.
Peter Chapman was the CEO who just became chairman of the board. Loves the company, whatever.
Yeah.
And what is this?
Hey, Elemental, you're in the chat. Are you buying IonQ?
And their chief revenue officer selling. Oh, who's this?
And no, I'm not buying Chegg. I had an issue with Chegg when the thesis was presented to me. Oh yeah, okay, so this makes sense. It just died, just rolled over it and died.
I thought that was a short. I don't know why people are pitching it so long.
Sorry, which one? Sorry, you talking about Chegg or the one you're looking at?
Chegg.
Yeah.
I'm trying to see what the D. Oh, these are just RSUs. Okay, sorry. Go ahead.
No, so like Chegg, part of the thesis was like they're going to be able to buy back a lot of stock, et cetera, yada yada. They had all this cash, but what no one was paying attention to, and the individual who was a big proponent of it, all respect to him, right? All that's deserved. I don't think he skimmed through it because there was one line item that I remember I was texting you and Kyle or in the chat, and we were talking about Chegg. It was months ago. It was literally like
Mm-hmm.
I think like over here. So back
Mm-hmm.
definitely in 2024. I was at the gym, and even like on like my phone in between a workout, I was just looking through the financials, and immediately I saw on the current liabilities section,
Yeah.
they had a ton of debt due. Current debt. Yeah. So it's like it nullifies. So like they didn't have any debt, long-term debt. They had a clean balance sheet if you ignored the current liabilities, which you can't do. And so they either had to refinance that or all that cash that they had would be used to basically pay down the current debt. And so that left virtually very little to do a lot of meaningful share repurchases. So that basically just crushed that thesis. And when you look at the core business, there is a structural impairment due to LLMs. Like LLMs have gotten better and better and better at answering questions. And it's very dynamic and adaptable. So they can go across the board with different kinds of questions, and they're actually only improving. And you can ask follow-up questions. So you can't really do that in Chegg. Or old Chegg, and then if Chegg has now implemented it, it's sort of like too late because it's already integrated in these very popular LLMs, and it's basically almost like a side, feature.
Yeah,
not a main feature. So
yeah. I someone asked me to look at it once, and I was like, "Oh, this looks like an interesting short," and they're like, "No, for a long," and I was like, "No, I would look at it as a short."
yeah, here. And in fact, we can look. I can pull it up quick.
I never shorted for whatever it's worth. Like I'm not saying that I called it. I just thought, oh my gosh, you know what companies also died? It's Rackspace.
Well, you threw a rock and there was good shorts.
Yeah,
but
I mean, yeah. So, Chegg.
Here, I'm
Oh,
on
I was
there.
gonna say you asked Elemental about quantum. I don't know what he knows about quantum, but he's saying there's only one algorithm that's proven to be somewhat useful, which I'm assuming is Shor's, which is the one to do the factoring or like how technically they could break encryption. Like in my understanding is currently the narrative is you need 1 million qubits probably to do anything somewhat practical. And currently they're at like 100 qubits. The leaders are. A lot of them claim they'll be able to get up to 1 million in like 5 years. And like maybe there's something with the Microsoft topological qubits. But from what I've heard, like probably not. And so if you're shorting IonQ's trapped ions. Oh, Grover's? Okay, Grover's algorithm. All right. Is that that's the one that's like more, it's got more general use, right? And is that the one that they can use to to supposedly like find not chemical, but like pharma whatchamacallit. Like people think they can aid in like drug discovery. I think that's Grover's. I don't
Yeah.
remember.
So what it does, it's unstructured search. So it basically, you can go through a ton of data very quickly. And then in theory, you get Grover's algorithm running on a quantum computer, can find that specific item much faster. And they call that a quantum speed up or a quadratic speed up.
Yeah. And I think once again, for any of these to work, you need exponential amounts like of actual qubits that can be used, and no one's close to it right now. And people don't even know if they ever technically can get to a point where they can do it.
Well, what do you mean? Definitely these wonderful companies that are used in the same sentence or mentioned in the same sentence as Alphabet and Amazon.
Well, obviously,
Surely,
Elemental. It sounds like he knows about this. He must be very bullish on D-Wave because they do annealing, and quantum annealing is so useful that no one else does it but D-Wave. But they're saying it's quantum now.
yeah, I
Quantum
know.
realized.
Elemental's definitely aping into D-Wave quantum.
Yeah.
He can't get enough of it. Every paycheck he gets, he's just like, just throw it in.
He's like, yes, Alan, Daddy, take my money.
Yeah.
But anyways, the point is like, and I agree. Potentially, it can be something, but like, and we're mostly memeing right now because the reality is what Jensen Huang said is probably right. 10 to 20 years away. These companies don't have cash burn for that, and the public companies are not the leaders. So, and they don't have the R&D budgets to probably catch up to leaders in most cases. Not that necessarily bigger R&D budgets always win, but it helps. Simon, just to be clear, Microsoft said that they have topological qubits, but in the Nature article, I saw several like peer reviews that said there's no actual evidence of them operating a qubit in it. And there's still, and Microsoft did this in 2018 and then had to retract their article. And so there's still a lot of questions around the efficacy or if that's actually true.
Yeah. And I don't know why, to be honest, like I genuinely don't know why the retail hype just got surrounded. And then all the people, remember the gentleman in our server who, when we were sorting his account and everything, he was talking to me about these short positions. And he said, it was a compliment to you. Not that he didn't direct to me. He said it to you. He's like, Andrew, for a layman, he's very knowledgeable about these things.
For a layman.
Yeah, no, that's a great compliment for someone in the field.
And
so
really quickly, Hans is asking an important question. Yes, you need right now, you need quantum computers to operate at absolute zero because you have to get rid of the noise. So yeah, you need like this isn't something you're going to plug in your house. It doesn't have like general application for the most part.
yeah,
it's a very niche set of applications, which is fine, and it's really cool, and it's a cool science experiment. But at the end of the day, if you're an investor, you probably don't want to invest in something that could be maybe useful potentially 10 to 20 years from now.
I do totally. I put my life savings behind that.
If you want to do that, buy Google, buy IBM. But let's get back onto what we were talking about. What were we talking about?
Which is shorts.
Do you know you know what company got killed recently? It was down 20% today. 50% in the last month. It's down.
Is this a company I know intimately? Oh, 20% today. Robinhood.
Nope. They're down 20% today as well, but that's not what I'm thinking of.
Dang it.
I only know someone mentioned it in the comments. I remember this.
Someone mentioned in the comments. Is it Spotify?
No.
Reddit?
Yeah.
Reddit. Dude, I really got to say, I don't understand Reddit. I don't I'll never invest in Reddit because I have a bias to dislike the platform. I dislike Reddit entirely. I despise it.
Yeah, I just want 4chan to go public. I don't think it can, but it'd be really funny to see their investor deck.
No.
We have a plethora of users with really valuable information. It's like the most degenerate shit.
I got to tell you something about that. Remind me later. You'll get a kick out of it.
A lot of people are saying that Reddit's like a big porn site. That I was not aware of this, and like people are like, someone was saying like they need to monetize that better, and I was like, oh.
Well, to be fair, like I wouldn't know. Like I genuinely do not use Reddit. I think around my age group, there's quite a few. I think it's a little bit more popular in millennials. But
yes,
I was asking, some of the younger folks in my sister's generation. It's like they don't really care for it.
I think it skews. Well, I don't know if it skews that heavily male.
I asked the males to.
Okay.
Just to be clear, not females. I understand that. Yeah, they don't really.
Someone also mentioned Discord's going to IPO. That I think would be interesting to read the S1.
Yeah, Discord will be interesting. It'll be like a Slack when Slack was public. Similar kind of business, but less for B2B and more to B2C.
Yeah.
But
everyone said that the use in Reddit was using all the data there to train AI models. That was the narrative. Like you have all this information there. Because like a lot of times, to be fair, if I wanted to look up a question, I would Google something Reddit and find the because it has so many like super specific niche communities. And supposedly, I think you can use it to train AI models. Now, the issue is I feel like the AI models can just train off it without paying for the data. And then you're going to have to sue them or something. I don't know. But yeah, so we can get back on tracks. We talked about high beta. This is another high beta stock, probably heavily retail owned. I don't know. Is Spotify down a lot?
Very likely. I would be very surprised if Spotify's not also coming down a bit.
Down 25% past month.
Yeah, that's relatively strong for what it is. So
yeah.
But today, at least, it was down 8%. It did not get spared.
In FYI, I mean, I feel like us and most Americans and most people on YouTube are heavily U.S. stock market focused. A lot of the foreign markets have done very well this year.
Yeah. I mean, after what seemed like chronic underperformance.
Yes.
Eventually, yeah. Except not all of them. So, because there were a lot of I would say it's like the unloved European stocks, because there were plenty of European stocks that performed poorly recently. And they were the ones that had traded in line with, U.S. counterparts or U.S. companies as a whole. They were viewed as like higher quality. So I'm thinking of, Hermes was not a good place to hide recently. LVMH, Race. I think Nestle was, because it was part of that whole like flight to safety, play defensive, you play consumer packaged goods. I know that I see what you're saying, Gil, in the comments about, Nancy Pelosi buying DG, but I saw earlier you were also saying, it's like time to not do that. So are you going to follow her or follow your gut there? But
can I say someone also made a good point? Well, actually, we'll say the foreign companies have done well.
Yeah.
Like there's the Nestle's, the staples have done well, but that's to be expected. When staples are leading, the market is usually not that good for the health of the market. It signals some. I think it's very rare when staples are the leading sector in the market that it's positive for the market overall to go up. But someone was saying, Lil Broomstick was saying, Sven Carlin was trying to say this PE space was like the weed stock bubble.
Yes, I started his comment because I wanted to get to it, but we can start getting into it now. So.
Okay, because I feel like that is such an insane comparison. First of all, like you're comparing maybe an overvaluation in a space to a space that ran up insane levels on speculation. Like comparing the two is absolutely like in my opinion, batshit insane.
Mm-hmm.
With that being said, Fabio and I talked, and a lot of people know for a long time KKR had been my largest holding, and I had trimmed it quite a bit. I didn't trim at the top. I sold a little bit at 160, but mostly 140 was mostly where I trimmed a lot of it, I think. And one of the issues with private equity is if you're looking at a potential stock market decline. I don't know if you wanted to talk about this, but PE is going to trade. It's a leverage play on the stock market. That is how PE will trade. And while the market's going up, there is some use in picking the right player and getting in understanding how they work. But if you're looking at a down market, these things are just going to be leveraged. They're going to be levered beta. If you're not very optimistic on the stock market, you don't want to have your largest position be a PE company. Simply because what you're saying is, I don't feel very bullish on the economy, but I'm going to position like I am. Well, that doesn't make any sense. So, that was kind of my thought on that.
No, absolutely agree.
But comparing it to it's just they're overvalued a little bit maybe compared to historical multiples. But I don't know how you can. I don't know what the argument is for comparing them to MJ stocks. I already said the word. I don't know if we're allowed to say it.
Yeah, that's fine.
But maybe for the only comparison I could see is if he's trying to say private credit market is like insanely overdone and private credit's going to blow up.
Oh, yes. He also said that. I watched the video because someone else asked me earlier today.
Oh, so what did he say?
So he's comparing private credit and the valuations that private equity pays for companies as a whole as like a crazy bubble. He showed cases of Brookfield buying companies at, I believe it was recent buys, and they were buying a company for, was it 8 times sales? And I forget what EBITDA multiple. And yeah, it seemed egregious. I don't know, because I don't really care for Brookfield, but he was also looking at private credit, which falls in the realm of the others or some of the others. And he was saying that effectively, which I don't disagree with this, that private equity is a scam in the sense that they tack on fees and they're in the business of fees, not returns. And they have clients that are willing to pay them for just, for a mythical slash, not mysterious, but mythical and perceived lack of volatility because they're not marking.
I'm going to counter that and say I've never understood the argument that it's only a perceived lack of volatility when you go through 2022 and there was no volatility. Like, I get what people are saying is that you kind of look at it and go, that doesn't seem right. But unless you think that there's going to be a mega recession that, really kills these private equity companies, they are going to have less of a markdown because they're not publicly traded companies that they hold. And to be fair, if you're valuing a privately held company you hold based on cash flow, it is going to be less volatile than the market just assigning it a random number every day. So people say that like, oh, it's only a perceived lack of volatility. No, it's real, I would argue, lack of volatility, because you're saying we're going to judge it off this methodology, and yeah, we're going to clean it up a bit, and if the market's down, we're going to find a way to maybe, help us out a little bit. But if I come to you and say, okay, I want to redeem it at that price, you say okay. So
his other argument was the leverage component, saying these guys are leveraged quite a bit. And then, of course, he used a clip from Buffett, and which Buffett describes alternative assets as being not worth their time, something that most investors or all investors should not really worry about. And then he said that a lot of these private equity firms, it's like the secret to being rich is you become a good salesman, you raise 10 billion in AUM, and then you can be the dumbest investor in the world and your family will be rich for generations.
To FinTech Boy's comment about PE, some funds in the last 5 years, and I know like one of the big one was BREIT, pausing redemptions. I thought that what it was they have basically a limit that they can take out per quarter. One, because these aren't liquid, and if you're investing in these, you know that. But two, just to control the volatility in it. And maybe there's other funds that were different. But like it wouldn't surprise me if some smaller funds or some even larger funds did pause to control volatility. But it's kind of difficult when so. KKR. It's down a lot.
Yeah, it's down quite a bit now.
If the market goes down, it will continue to go down, and at some point, I feel like it'll get an opportunity. But I just
look at this cliff. Almost.
Oh, you're talking about in a fund life. I didn't know that. Yeah, I know. It's insane. So I didn't know that FinTech Boy that some were pausing into fund life, and the redemptions on or pausing the redemptions at the end of a fund's life. That's interesting. But yeah, I'm talking about quarterly redemptions. That was the ones I remember where people were making I remember news was making a big deal about it, and I was like, that's just a quarterly redemption like maximum, which made complete sense to me. I mean, it's funny because I know where like I get the argument, and I feel like there's two ways you can go about it. You can say, okay, the main one people say is they make money off AUM and not performance. So welcome to the asset management business. Like that's how it works. Now to be fair, you go to a KKR's investor pres, their average IRR on their funds that they state is like 20%. So if you actually were able to do that, then good for you. But I wouldn't. I would not compare them to an NJ stock bubble. I feel like that's an insane comparison.
Yeah, I think that was a bit stretched. I mean, most of the argument he was making was like saying this is like 2008
in private credit.
Yeah, in private credit.
And
he was looking at delinquencies in private credit being significantly higher and rising as rates go up. Is another argument he made.
Well, I mean, you can't default if you get just a pick toggle, right?
So. Oh, is this the book? I forget the author, if it was the same author, but is this the book where he basically says private credit returns are BS, and it's all just like the equity portion is just leveraged equity, and the credit portion is just leveraged credit? And I think he was advocating, he's like, he can't wait for these funds to have like a public vehicle, a publicly traded vehicle, so that we could see the real performance without any noise on a day-to-day and all the volatility that it has. I think that's the same guy.
Yeah, to FinTech Boy's point, private credit's so small compared to
real estate.
So yeah, comparing this to 2008 is like. The other thing I would also argue is whenever I hear about private equity, it seems like everyone implies that like private equity is filled with people who are really bad at their job and they just get a bunch of shitty deals and they buy these companies at way overvalued prices, and like they're all terrible buys. And if you talk to people that actually work with people in private equity, it's like, no, they're like really smart people and they like they're killers and they work really hard to like get, good deals. So I just I don't see it quite like a lot of people do, but I think you could argue they're overvalued right now. And in a stock market drawdown, those stocks are going to get hit hard. I think, like I said, comparing it to some of those insane stock bubbles is just, to me, stupid.
Yeah. Well, in any case, he's very bearish private equity, which I think he's doing it at a time where private equity is going down for reasons not that he's stating. And like we already said, it's basically like you're getting leveraged exposure to the market. Same with Raymond James, by the way. Raymond James is another, basically leverage to the market exposure.
So how is Raymond James different from like Interactive Brokers?
So because they mostly focus on management of people's money. So wealth management.
Gotcha.
So yeah, they're gonna grow. Their fees are gonna grow if the market grows. So you should see like earnings line up with the market trajectory. So in a way, it's like leveraged market returns through Raymond James. And they just buy back stock. Yeah. Looks really good.
I didn't realize
that.
Yeah. I didn't realize Raymond James was I mean, it makes sense. I just never really thought that about their stock.
Oh yeah, they bought.
I mean,
they buy back
I think like even like Stifel has like I think they're publicly traded. Or Stifel,
yeah.
whatever it is.
So this whole peer group is effectively like leveraged market exposure, way less so than stuff like something like a State Street, because State Street's more low cost.
You know what's good? You know what's a similar play to this? It's like leverage market exposure here is B. Riley, right? Because that's an asset manager.
Yeah, same thing. Boutique investment bank.
Yeah,
up and coming, the next Goldman, some say. Trying to think what else is like. Okay, by the way, we're in the section where we talk about our longs. Okay, first question I'd ask you is like, are you buying here? Have you started a nibble?
Just, I like licked it. It wasn't even a nibble. It was like I sniffed it. I like that. Stop it. I like that.
What's going on?
But,
clap your hands. The lights change.
So I was playing that. No, but so slightly. I mean, I was kind of feeling like I don't know about here. My thought has been instead of trying to average down, is let the market flush a bit, wait for something concrete to come out, miss the first 5% up, but you're going to miss the first 10 to 15% down too. But I'm starting to say, okay, maybe I start to just nibble a little bit. I won't tell you the stocks I'm buying, but I can tell you the themes that I like.
Yes. Yeah. What are the themes?
Okay, there's really 3, and you convinced me on one. I think you're stronger on one, and so I'm going to leave it for third because I think you're a lot more into that theme. The first theme is one that we talked about. Companies that I consider decently high to high quality that are trading at super cheap multiples that are buying back shares. Number 2 is AI data center CapEx plays. And then number 3 would be defense spending. And I put number 3 because I think that's more your idea.
Yeah. Okay, so yeah, defense
Are you buying
spending.
here?
Yes, I am.
What are you buying, Fabio?
So I'm buying into defense spending still. I'm buying into the second and first theme that you mentioned, and conversely, still think some of the insurance plays, although I feel like they've done their job.
Yeah, like it's hard because there were some insurance plays that we were in, and I feel like they did really well. Yeah, but if you think the market continue, if you're uncertain, I don't think it's a bad place to hide.
No, definitely not. But yeah, let's talk about the defense stock. So I'll just throw up the one that everyone knows, right? Just to kind of illustrate the price movement here.
Palantir.
Yeah, Palantir, defense stock. So Lockheed Martin, everyone knows this company, needs no introduction. But a lot of this sell-off from here to here was political noise. So there was a lot of fear about Doge, cutting of spending. I saw a comment, I think it was yesterday or today, that was operating off of really old information, but it was a fairly modern comment or current comment. And it was that, something about the current administration cutting defense spending. And this was somehow very bearish for Lockheed Martin. Well, that person was not up to date at all on anything, because first of all, that was like one day on a Friday where the journalists were like, sources said, blah blah blah, cut defense spending, and then it was clarified by Sunday by the defense secretary that it was cutting certain programs to focus more on procurement, which is good for Lockheed Martin, first of all. And so it was not about cutting that defense spending. And then secondly, on the new proposed drafts for budgets, have the military budget increasing from anywhere from 100 to 150 billion. Furthermore, we have more tailwinds from Europe. Well, with Europe spending more on military defense now, with the proposed budget continentally of about $800 billion combined. And so that puts square in the way of Lockheed and all the others as being, beneficiaries of that spend. And it would imply that all the sell side estimates are wrong, are likely wrong, because they haven't changed at all. So no. For the question on has Ukraine changed much? No. It's changed the way we look at certain tool sets like drones, but then we think of countermeasures for drones. But even in that field of warfare, it appears as though a lot of the more advanced systems are still insanely useful. And one of the limiting factors has not been drones. Drones has not been a limiting factor. It's been the other stuff. So when you actually look at the complaints by, whichever side, it's not a lack of drones that's been the main inhibitor of progress on each side, but it's been the lack of advanced equipment. So not at all. Western Union bought 10% of their shares and trades a super low multiple.
What do you think about put volumes at all-time highs? Just really quick, and then we can get back to.
No, well, that's about that's about getting bullish, right? So put volumes. You're saying that more people are buying puts at all-time highs. Andrew, what was I telling you? And this was the conversation I was having with my friend this weekend. What he was saying is like there is just a sudden boom, and I don't know if it's tomorrow, but like we have to pay attention, because the thing is when we were getting ready, it was we showed that it was a good time to get ready because no one was positioned. The likelihood that everyone's now going to kumbaya, everyone's going to be bearish together, and everyone's going to make money, I've never seen that.
I just want to see the call put ratio right now, though. Because you could have all-time put buys, but you could have.
Maybe it's a good time to sell puts.
It doesn't look like it's crazy. If I'm reading this chart right, call put volume ratio doesn't look that crazy. Here, I'll flip it to you.
Actually, that's one of the main factors of the F&G index. So what does the F&G index have it at? Because there should be, I don't know what source. Put
F&G index?
Fear and greed.
Oh.
So currently on the 5-day average, it's at extreme fear. And it's measuring at 0.8, and that started. So this massive spike happened in that last week of February.
But it's kind of slowed down now. Interesting.
Yes, I think it should.
It's not that crazy. It's not crazy high. Although, like April 2024, you had a higher volume by quite a bit.
But look at the last time it spiked this insanely. That was the yen carry trade fear.
Yeah, that one seemed kind of crazy to me. I don't know.
But yeah, that was the last time it spiked.
What happened in April 24? Why did that one spike so much?
Do you remember we had that sell-off, and it was like a random spurt of volatility. There was genuinely no news. And then you had Meet Kevin come out and say, oh, this is bad, this is bearish. And then I came out, I just kept doing laughing emojis, replying to him, like quote tweeting him.
So
I was like, we buy this.
Tells me things. So You don't have it up on your screen, but I'm looking at this chart here.
I can put it up here.
Put call volume could still go up quite a bit.
Right here.
Because if a random no news event in April put it up to a 1, basically, and we're at 0.8, I don't think it's that high. I would love to see the VIX above 30. That VIX goes above 30, that's when. And we're basically there. That's why I bought some today. But to your point about defense spending, I don't think no matter what happens that these companies will be a bad play here because they've already seen extreme pain. People misunderstood what was it Basent that was saying?
Yeah.
No, it wasn't Basent. It was Hegseth.
Yeah, Hegseth is the defense secretary.
Hegseth said that they're going to reallocate or reapportion 8% of the budget.
Correct.
And people
Not
took it
cut
as
8%. People thought it was cut.
Yes.
So.
And so you have that baked into the stock price there. Could be good. Doesn't feel like there's a lot of downside there. I think it's a really good call out by you.
Yeah, it's probably a fairly easy long.
Yeah.
You throw a rock at any of them. I like Leidos a lot.
Leidos?
Yeah, Leidos. LDOS.
Okay.
Lockheed's good. Blue chip. LDOS is one that I like a lot.
Oh, the other
Dan's
thing,
on the hunt for something else, but
did you mention, I should say, the European Union was asking for U.S. defense contractors to send more?
yes.
Okay.
That was over the weekend. It was the NATO chief was requesting all defense contractors to increase production. Because, just like I'm not an expert in, military, but as far as like what NATO is, to my knowledge, and what I've sort of learned about it over the years is it's basically like just a standardization or organization, and that has defense clauses for each other, but primarily what it's meant to do is to get a bunch of countries to agree upon a standard for things, so that weapon systems from one nation can work really well with weapon systems from another nation. So a lot of American tech that doesn't have a clear-cut alternative to what some of the European military defense contractors have, they will still be indispensable and still get a lot of benefit. You might have some preferential business for maybe some heavy vehicle European companies, right? So tanks from Europe versus maybe like a General Dynamics tanks. You might get, obviously preferential contracts for maybe some jets from Europe versus the United States, but in large part, some communication, anti-drone defense systems, etc. Across the board, artillery systems may not have a clear-cut European alternative, and that will still be procured from the United States. So,
yeah.
But yeah, Leidos is, I know that, for example, because one of my closest friends, I will not say which one he works at one of them. And one of the things that is popular, because he has then friends who work at all of them, Leidos has different focuses. They have some weapon systems, but primarily it's a lot of, they do, like, for example, cybersecurity and cyber warfare for the U.S. military. And they actually have among the higher paid roles in the contractor space for the U.S. military. So they tend to pay very well. If you work at one of the defense contractors and you have good skills or talents, You may consider Leidos as an alternative place of employment if you can get in, and you'll usually get paid a noticeable amount more than your counterparts at the other firms. I really like the CEO of Lockheed Martin. He's one of my favorites. In fact, actually, the past 2 CEOs of Lockheed Martin have been really good. But the current CEO, he comes from American Tower. Yeah, he's really good. I also do like the current CEO of Leidos. I hate the CEO of Huntington Ingalls. I'm indifferent to the rest. Yeah, RTX. Well, it didn't sell off recently, but there was that insane Pratt and Whitney opportunity that presented itself over here. That was insane, but you'll get one again eventually.
I'm just trying to compare. Someone asked a question. I just want to do a quick comparison.
Oh, in this comment, yes, tech I think will outperform. There's the growth is still there. You got to follow the growth.
What tech on outperform what?
The broader market. I think in the spirit of his question, I know what Hugo's talking about. He's really talking about Alphabet, Meta. As long as their earnings grow in excess of what the market grows, then yeah, they'll probably continue to outperform. But it's just a question of earnings. I think people overcomplicate it. So,
someone asked about cybersec.
mm-hmm.
So they said Crowd, Palo Alto, Fortinet.
Mm-hmm. Oh, I remember you told me actually that Crowd was getting close to 300. Oh my goodness.
Mm-hmm. I don't think Crowd. So the issue with Crowd is the rapid decel in their net ARR growth is pretty concerning to me. Let me be clear. Excellent company, amazing company, but you were paying for an excellent, amazing company. And this excellent, amazing company is now slowing down their rate of growth, which is normal.
Yeah.
I wouldn't be really interested, and it would depend on what else is in the market until around maybe 250. Then I'd start to look at it. I'd really start to buy this thing maybe, let me just look real quick. And this is CrowdStrike's the one I'm most familiar with, for those wondering. But let me see, what's the free cash flow yield right now? I'll do that. This way, we'll do 1 year. So right now we have CrowdStrike at about a 1.6 free cash flow yield. You got Palo Alto at a 3.2, and you got Fortinet at about a 2.9. I mean, if I could get Crowd at a 3% free cash flow yield again, I'd go for it. And I'd probably go pretty heavy. One company, did I talk about one company I find interesting? I don't think anyone talks about in cybersecurity.
Yeah. Which one? I think I know what you're going to say.
It's CyberArk.
CyberArk, yep.
No one talks about this company. You're not going to, I've never heard anyone talk about this. They're growing fast. Really interesting company. They've had a big sell-off while executing well. Much smaller than these guys, both in terms of market cap and size of revenue and everything. And they're the kind of company that's growing top line 30% and is now inflecting into really juicing up their margins. Getting that they're still GAAP EPS or GAAP EPS negative, but their free cash flow went from 50 million in 23 to 220 million in 24, and the forecast is to grow that on a go forward basis at mid to high 20%. So they could be interesting because I think it's easier for them to grow. Now the question is the quality of the product, which is what I'm still working on and kind of uncertain on. From what I've seen and heard it sounds good, but I'm not 100% sure. And so this is one that I came across and I'm doing a little more work on. I find Palo Alto and Fortinet both good. I feel like to really want to buy them, I'd want another 10 to 15% off, but I still think that they're good companies.
Interesting. This one sold off too a little bit.
Not as much though.
I don't think it deserves to sell off as much as CrowdStrike though, because they're still executing, right?
Well, they're also not valued as highly. They're twice the free cash flow yield. So,
which is not saying much.
3% to 1.5, yeah. But so, I like these companies. I still think we have a lot of growth. One thing I find interesting about cybersecurity that I don't think enough people talk about. So I was talking to people about this. Is everyone talks about robotics and drones, and no one talks about how are you going to defend them from being hacked. And I don't know what the answer to that is, like how you prevent that from happening. And I don't know who's going to be the winner in that, but I think that's an interesting rabbit hole to go down. If you can figure that out, I think you'll make a lot of money. Maybe not today, but in 3 years from now, I think you will.
Like, who's going to benefit the most from that?
Well, think about it. Every robot and every drone
Is an
needs endpoint security on it. You are having a massive expansion in the number of endpoints in the world. And I mean, someone hacks your drone and it runs and drops a grenade on your own people, or there's a lot of. Now, I'm assuming that's more like military cybersec, but they could use these players. I don't know. Yeah, it could be them. I don't know. I think that's a rabbit hole you want to go down. Because that, and then robotics. I mean, you want to make sure that people aren't able to drive around and hack these robots and make them do things that you don't want them to do.
Yeah.
Or use them as surveillance machines. Any of those things. So, you prevent the drones from being hacked by putting a tinfoil hat on them. I like it.
Yeah, I think in cybersec we have some opportunities opening up.
Yeah. I wonder if we're gonna
futures are green, so yeah, we might have a bounce back day tomorrow.
Very slightly. I feel like it's still very open to see what happens tomorrow.
Yeah, I was gonna say, how many times did they open green, or the futures have a green let's say moment the night before last week, and then it just was blood.
Oh yeah,
it was like 3 days last week.
Yeah, some like futures traders like, nah, this is the bounce back, and then open up the funds are like, hell nah, it's not. Sell.
I mean, we have to. There will be bounce back days, and then
it feels really oversold right now. I'm just like, I feel like there's going to be a bounce.
By the way, for the questions on valuation stuff, I'm putting in starring it because we're going to answer in the Q&A. I saw 2 questions from the same person on a few of them. Sorry.
But it feels like there's going to be a bounce. Like usually, even in a bear market, you have some bounces. You have some sustained bounces.
Yeah.
And then it goes back down.
Yeah.
And this, I mean, dude, you had Tesla down 15% today. You had, Tesla's getting crushed. Apparently there's like a video, and I haven't watched it, of Elon Musk crying, and I don't know what the context is. But, I mean, you have that down 15%. How much?
Wow.
Oh, yeah.
That is called round tripping. All the retail celebration for this.
I was getting so much shit for shorting Tesla up there, remember?
Yeah, you were.
Dr. Latina.
Dr. Latina's asleep. No.
He's a changed man.
He's a changed man. He sold it to some regarded person.
Yeah.
He's happy.
But it's just, and I'm not short Tesla anymore, but
we are also equally regarded to have not kept the short.
Yeah, to close it. But with credit spreads, which is how I was shorting it, we got mostly upset anyways.
Yeah.
Um,
But we could have then opened a direct short.
yeah, I don't know if I could have.
Yeah, Tesla's
Well, not that, but I just don't know if I would have had the capacity with my other shorts. But I mean, you've had insane. I mean, what's the 5-day chart on this? Just to show the blood that's happened on this on a name like this. Only 17%. Wow, or 18%. So most of it was just okay. Go to the S&P 500. What was the 5-day chart on that? I mean, having a 3.5% sell-off, you could be in for some more pain. What are the cues? Four? I don't know. Maybe go down a month. I'm just saying. I'm just looking at this trying to figure. Now that's more. And can you just overlay the S&P 500 with that, just to the compare to? Yeah, I could see a little relief rally up a few percent off this. And then the market's going to decide what it does from there. Because that relief rally could turn into, that was the bottom. Or that relief rally could turn into, nope, back down. And really what?
No, and I think this is a good time to tell people that, like, chasing the short idea for beta, like shorting beta, I think that's gone. The easy money's made. You're now taking on, I think, a lot more risk.
I think before you could kind of short beta indiscriminately, and now you want to probably try to target names that have stories that you're confident in.
Yeah.
I mean, there was okay. It's funny because I was watching Martin Shkreli's stream, and the second Palantir dropped, he had like he's got hedge fund experience, and he goes, the second he saw that drop, he starts asking the chat, give me beta, give me Momo right now, give me a Momo name, I don't care what it is, just give me it. I remember I was like, Hims. Oh, he goes, shorts Hims. Someone says Hood. Boom. Shorts Hood. Someone says Apple. Boom. And he started talking about it. And he said, look, when you see, because do you remember the Palantir where it just dropped? I don't know if you can pull up on a chart that. When you see that, he made a good point. So what happened was somebody, for some reason, said, and it was really abrupt. It looks like Palantir was just going like this all day, and all of a sudden just went boom. There wasn't any. It just dropped like 10% or something.
Here, I actually took a screenshot because that's the day I shorted it.
Okay.
So I have a screenshot.
And what he said was, someone, for whatever reason, just said, "Get me out. I'm out now." And that person was pretty smart because look at it now. And he said, when that happens, yeah. See how? And that's a 1-day chart. Just going. Someone just said, "Get me out. I don't care." And he said, when that happens, that person and that stock, or people that hold that stock, they just had the stock go down. What was it? 10%? 10% of them. The same funds that hold that are going to hold other high beta, high momentum names. They're going to hold the Hims. They're going to hold the Hood. They're going to hold the AppLovin. They're going to hold Tesla. They're going to hold all these names. And so he said that's something from when he worked in hedge funds. It's the second you see that happen, it's like, and it's only maybe a couple day thing, but you just know, hit the similar idea names because those are also going to fall, which I thought was just an interesting insight. So to your point, just hitting beta, I think is potentially over.
Yeah,
depends on what the market does.
The easy money's been made.
Yeah, it depends. If the market decides to go down another 5%, hit beta, you're going to be happy.
Yeah, but I think you're taking on a risk.
I agree. Yeah. I think the risk reward isn't quite as there. I still think on a lot of these names, though, the valuations, Palantir's valuation's insane.
Yeah. Yeah, like if you're targeting, like you said, I like the way you described it. It's like targeting certain names is different from just throwing a rock and saying, what is the shittiest retail shitco that all the regarded people are long. Short that.
I mean, this company's still at 50 times sales.
Yeah, for sure. Yeah.
And it's at almost 200 times GAAP earnings, I think. Let me see. 2025 GAAP EPS is 31 cents estimate. It's trading at $76. 250 times GAAP EPS forward. So I mean, like, these things could fall more easily. But it's not just like throw a rock, like you said. So I'm still pretty heavily short, especially the names that I'm short. I think they'll bleed out regardless. I think you could have a little bit of a relief rally, and then the market's going to decide what it does from there. So I'll say this too. I'm net long. You're net long.
Yeah.
I think it's very hard. It's a very tricky game to get net short or out of the market for most people. Stay net long, maybe reallocate the themes you're in, but I wouldn't try to get too cute. And not now. You might be getting burned if you're like, I'm going to flip short now. And it's like, well, Fabio and Andrew went short, heavily almost a month ago. And that's when you wanted to be doing it. So, just some things to consider.
I will say today was a rather emotional day.
Today was lovely.
I couldn't handle sometimes the ups.
Yeah, I mean, join Capital Mindset to find out what I am short. But one stock was down like 18 that was short. Another was down 14. Another was down 15. Another was down 16. Another was down like 12. I was just sitting there like, it's like that gif of Patrick laughing in the fire.
Yeah. I mean, I gotta, with the new deployment, like with the new capital I'm putting into the account, I'm gonna start buying. I bought, one of the, well, it's like I think it's still your largest holding. I bought more of those, and
because I told that's one of the ones I said just to make sure we're on the same page.
Yes.
Yep. Okay.
And then Meta is getting down to a level I would be adding at because it got crazy, and people were always asking, like, do you think Meta's an ad here? I think someone actually asked. I have a bunch of start questions, by the way. If you guys ask a question, I star it, so we're not ignoring you. We're gonna answer it soon. But actually, we just entered the Q&A section, but we'll roll into that in a second. But yeah, Meta's getting right there. Like the beloved names, they're finally coming down nicely. Alphabet's pulled back by a decent chunk. Amazon, I'd want more of a pullback for now. But Meta is getting close to where I would consider it. I would actually still like to see 500 or below, which we could get. Keep giving these days, and we could see Meta hit 500 and below. My covered calls are definitely dead. Those are not going to be worth anything. Even the Amazon ones, yeah. Amazon, the TSM covered calls, those are all worthless. TSM looks really interesting already. So
I don't know, I can never do TSM.
Someone wants. Yeah, you don't like TSM.
I mean, I just don't like a stock that has a legitimate chance of going to zero overnight.
How dare you?
How dare
you're supposed to ignore that risk. Just go all in. Actually, Jay Nagy knows a guy at his work. He was streaming last night and he mentioned it. His coworker is 100% of their portfolio in TSM. Yeah.
Hope he's got some China puts.
All right, and I'm starring these. All right, we'll get right into the Q&A. So the Q&A section. Let's get into it. So I'll ignore the questions I don't like. No, I'm kidding. All right, we already talked about this one. So I'll unstart this. Wait, let me start. All right, cool. I accidentally unstarred the one that's up, but it's already up, so we can answer it first. Why you not be comfortable?
Would you not be comfortable?
Whoa. Wow. What was that moment? My brain's shutting down.
It's all good. You've had an exciting day.
I've had an exciting day. That's Andrew's practice being a dad. He's like, it's okay. You've had an exciting day. Pats me on the back, makes me burp. Would you not? You know what? I think they did the you know that photo that they made. You know which one I'm talking about? Here,
Who's
I'm gonna
they?
the community, because you know we have a meme community, or we make memes of each other. Let me post it here, and then I'll share. You'll know it when you see it. It's funny. What I'm basically gonna say is like, we need to switch faces because of what I just said. Okay, hold on. This one.
Yes.
We need to switch faces. All right. Anyways, back to. So this question. So would you be comfortable going into Google and Amazon for the long term at these prices, though? Okay, so for Simon, your question, I think for Alphabet, I'm pretty much there. The single issue that I've struggled with is figuring out what's going to happen with the search revenue and how that's going to be impacted by the advancements of LLMs. I'm still trying to really come to an conclusive answer, whether or not it's going to be a melting ice cube or it's going to be a sudden death. If it's a sudden death, it's going to look like a trap, in which case Amazon still has a lot of things going for it. They have plenty of strengths to still pull from. They don't have the same level of threats that Alphabet currently has. And of course, that's reflected in the price. But that's what I say. It's like Alphabet looks like it's the cheapest, but if search declines rapidly, it's going to be a trap. And I think everyone knows this. It's like the known fear. So right now, the question is like, how much is the market currently pricing in to Alphabet? And if, for example, all of that's BS and nothing happens to search and search keeps growing, in fact, then it's going to look like it's an extremely cheap stock in the future. Right now, most of the operating income comes from the services business, which includes search, YouTube, all of that, of which 60% or so is search. And then cloud is only just now picking up from an operating profit contribution standpoint. Thoughts, Andrew?
On Google and Amazon, or on Google or Amazon?
I think but I guess and or slash or. You don't have to.
Google's got terrible management, so I will not buy them.
Sad.
That's the rule. Sorry. No, but Amazon I like a lot. I mean, Google is, and I know it's kind of a meme at this point, but like I think there are some legitimate concerns that I've heard. And I think they're very well raised with Google in particular around sustainability of their margins moving forward.
Mm-hmm.
And you have the overhang, and you will have the overhang until this is gone, of the DOJ case.
Mm-hmm.
And if that case goes through and they do indeed force them to divest Chrome, that's a pretty big hit to Google. Would be a really big win for anyone that gets Chrome.
Yeah, I wonder who's going to get them.
Well, you can kind of think through it because there's only so many people because you'd have to acquire it, right?
Yeah.
And there's only so many people who could acquire it.
Yeah.
And of those people that could acquire it, there's only so many that would want it. So,
But
uh,
anyways.
yeah. So, not like suspicious laugh there at all, guys. Don't worry about it.
Is all going according to plan, Sir Andrew?
I mean, as far as I'm aware, yes. So then, that's the issue with Google. And so no, to Pete Morton's point, this admin is the one that brought the suit on Google.
Yeah. I don't know why that narrative is spilling around the internet. I don't know why. I see it on Seeking Alpha comments. Everyone's thinking it was like under Biden. It's like, no. It continued, but it started under Trump. He hates them.
This all started under Trump.
Yeah, he hates them.
And here's the thing: is Sundar Pichai was at his inauguration, but that is one of the man with the least amount of charisma I've ever seen in my life. He probably like interacted with Trump, and Trump was like, "Who is that guy?"
Who is that guy?
Yeah, because like, dude. So, anyways, Amazon, I like here. I think the thing about Amazon versus Google is Amazon. So the thing about sustainability of margins, very good point brought up by some community members. Is this capex that they're doing for AI data centers? How much additional maintenance capex will you need, and how much will that eat into margins? Is a go forward question. And their CFO or COO did mention that, like, oh yeah, like you'll see this depreciation base start to eat, have an impact on our margins. With Amazon, they've always had capex, so it's kind of business as usual.
Yeah.
But I think Amazon actually will come out. I think they'll be able to grow earnings on a go-forward basis at a great clip. I feel a lot better and more confident in Amazon than I do in Google, personally.
I would totally 100% agree with you that as far as like levers go and the business line that Amazon is in, I have greater confidence in their success than the ones that Alphabet is in. Besides, I mean, cloud for Alphabet, they're really going to do well there, but it's just a question of like, how much will that pick up? It will be pick up enough to, reduce the scares or concerns with the other stuff. Yeah. Which brings us to another question. Fabio, can you look at the, okay, so we have one on NVIDIA. Basically has the same question for NVIDIA and Disney. Valuation seems still bad. NVIDIA, we didn't even talk about macro. Oh my gosh. So we skipped the macro discussion, so I have to adjust the timestamps. But
what's going on?
Yeah, Disney is a great segue. So we're just going, let me just delete this. And I'm going to combine this section. So that way, hell, it's all together. But Q&A, macro, arena recession. So I'm going to save that. All right, but this kind of goes with Disney. So the reason why I'd be very worried about Disney is the new stuff we were talking about before getting on here. What did we just get from Delta Airlines? A nice piss on everyone's parade.
Yep.
And what was that, Andrew?
They lowered forward guidance. So previously they had guided for 8% year-over-year top line growth, and they lowered it to 3.5. And they cited just weakness in the consumer and lack of consumer demand. And basically, I guess if we want to talk about more generally, there's a lot of readings that the consumer sentiment is down, that consumers aren't very excited at the moment, or that they aren't wanting to, or they just are uncertain. And that can have an impact on the economy, especially in a consumer-led economy like the United States.
Yes. And hold on, let me do one minor correction. Let me
Why are we using Google Finance? That's Fabio, not me. Don't put the sins of Fabio on me, Caleb.
All right. Give me a second. All right, cool. All right.
Hey, there you go. There you go. There. I like
Okay.
dark mode, by the way. Shout out to whoever did the dark mode at night. It's nice.
Yes. So, actually, one question. This is super minor. This is honestly the only reason why I would still use Google Finance is
Yeah.
like, can I get dragging? Can we get a dragging feature? Legit, if we had that when I do these live streams, I will just use Yahoo Finance. I promise. Soon? Okay. Because if we get dragging feature, I'll just pop in here and just use this. Because you do get more information, and I can quickly just kind of go through different things. But if I get the dragging feature, which SA doesn't have, and a bunch of other platforms that allow you to showcase charts just don't have very easily, and where it's like quick, where I can quickly search things. But anyways, so coming back to it, so that's my problem with Disney, is that exactly what Andrew was just getting into. If we have travel come down, a bunch of concerns about economy, spend, well, that doesn't bode well for Disney parks business.
Mm-hmm.
And I'm trying to, if anyone asks a question, I try to, with my eyes, I try to find them and then star them. With your other question, which was about NVIDIA, so I'll unstar this one, and then we'll put up NVIDIA. I think you do buy NVIDIA here. What do you think, Andrew?
Do you buy NVIDIA here?
Yeah, I think so.
I think you're gonna get pretty soon. I think you'll get NVIDIA relative strength. NVIDIA at like 107, 106. So here's the thing. Back to your thing on macro, what did Oracle just say on their earnings call?
They're going to double data center this year.
Okay. What did Google say?
They're going to increase it by, was it 70%? I'm losing track of who.
I mean, Microsoft said they're going to raise it and shift more into short-term assets, which is GPUs. NVIDIA themselves had good guidance. Amazon's going to spend more. Meta's going to spend more. So I don't see any slowdown in this theme. I think the one thing people worry about is if there's a recession that impacts the cash flow of these companies, could that make them pull back on the CapEx? I don't think so, but I think that could be getting priced in.
It's fair. Mm-hmm. And there's quite a few adjacent plays to this. So not just NVIDIA, but yeah, so that answers that question. Let's go to the next one. Rank these 3 stocks at current valuations: Uber, Airbnb, Booking Holdings. Again, considering the macro backdrop we just described, the fear of, what might come about within the next 6 or 12 months. Under that context, I think Uber is the strongest, likely, but all 3 of these could get hit. But primarily, I think Airbnb.
I think I'd be strongest Uber, and if I'm being transparent, I don't have an opinion on Airbnb or Booking. I haven't really looked at them enough to know.
Well, you know what? This question disrespects Expedia, and I think Expedia will do well.
Do you?
You know why?
Because they're already so dang cheap?
Nope.
Because they're in Europe?
Nope. No, opposite.
Oh, they're US based.
Yep. Domestic and higher focus on business travel. So higher focus on business travel, less on leisure.
Booking could do well then if it's got higher EU focus, because maybe the EU is coming out of a tough time.
I want to, not to be like totally US centric, but if the US goes into recession and the consumer drops off in the US, the rest of the world will catch a cold.
Fair enough.
It's because the consumer is too much of the consumption of the world. The U.S. consumer.
Makes sense.
Yeah, and a lot of these European nations, they are export focused. Okay, so Boba the Dog's asking about Microsoft. So is Greystone. So we'll combine both your questions together. So with Microsoft, I know because they're alluding to what I was discussing or alluding to before. I am actually getting bullish Microsoft, but not
Yeah.
hyper bullish. Like
It's been in the penalty box for a while, hasn't it?
yes, it's down for over the past year. I think that Microsoft has the greatest optionality to distribute, and it's about distribution at the end of the day. That's a major part of it, to distribute the agentic tools that are being developed. And they have, in many ways, we already talked about they have the best distribution, but they have in many ways a product that surprisingly is very sticky and monetizable despite not even being the free option. So despite being a lot more costly than its competing products that Google basically says, here it is for free, Microsoft is still able to charge. That speaks volumes to, at least for its core Office suite, how entrenched it is. You have Azure, which I think needs no introduction. Their gaming division, they basically are a S-ranked business in every line that they're in. Oh, sorry, there's one that they're shit at. Search. That is the one they're absolutely terrible. But in everything else, they're one or number two. Well, actually, in search, they're still technically number two, but technically, they're number two. And they control the largest install base of operating software in the world, Windows. So there's a lot of power and levers to pull for Microsoft. In particular, the most exciting lines of business, I think, are, of course, Azure and all the add-ons that they're building to provide more value to those Azure clients and more ways for them to monetize. So that's something that I think the future is still going to be dominated by the big three, and then a far off to the side fourth player that's going to be more so for the excess capacity. So that's how I see the world moving.
Oh, I haven't looked into Microsoft as much as you, but they're also shit at Surface, like Microsoft Surface. Yeah, those are pretty terrible. But I haven't looked at them as much. But the issue I always had with Microsoft, I think it's maybe the best business model in the world, is just valuation.
Yep.
So
it's now trading at forward times like 24, 25.
that's not bad.
No, it's come down quite a bit. Still growing double digits.
Mm-hmm.
All right, great questions. I'm seeing some more good questions come in. Okay, and I'll have a cutoff in questions at some point. All right, look at Ubisoft. Yes, we can laugh. Look at Ubisoft. This French company doesn't know how to make money.
Or video games.
Or video games. Or anything. They just suck.
So I played the original Assassin's Creed. It was awesome. That game was like, I thought, like revolutionary. Like how you could scale up walls. How you could, it felt kind of like you're actually doing some, trying to be sneaky and do things, so you could just kind of also run through it. Then you had 2 and 3, which is with Ezio, right?
Well, then no. I'm an AC nerd here. It says not 2 and 3. It's Assassin's Creed.
Well, I know, but
Assassin's Creed 2, Assassin's Creed Brotherhood, Assassin's Creed Origins. No, Revelations. Sorry, Origins is later. Revelations. And then you had Assassin's Creed 3. Then you had Assassin's Creed Black Flag. Then you had Assassin's Creed Rogue that followed up, released at the same time as Assassin's Creed Unity. And then after Assassin's Creed Unity, you had the Assassin's Creed, like the British one.
When did you stop being interested in it?
Definitely after Unity, which Unity became a great Assassin's Creed title after the fact. So upon release, it was horrible.
For me, I can't remember. I didn't play Black Flag.
Greatest pirate game ever.
It was only because at the time, it's like my family, I think, we didn't have an Xbox at the time. There was some funkiness, but or we just didn't buy it. I don't know, but I just remember feeling like that game became a copy and paste after a while, and like they're still making the same game.
Mhm.
No one wants to play the same game that they've already played 15 times.
Oh
Like,
no, and this newest one is a disaster on several fronts. They basically offended the
is
entire island of Japan.
oh, this is the
It's a big
that's that
scandal.
one.
Yeah, it's a big scandal. Yeah.
Dude, what is with I go off on a tangent, but what is with like these Hollywood or game? It's been really bad in gaming studios, but it's also in Hollywood where like there was like the people that made the Halo show who were very proud of the fact that they had never played or seen the Halo games.
I think it comes down to top-down leadership at the end of the day. So the leadership itself is disconnected from the audience that they
Mhm.
serve. So then they don't understand the dead weight that's piling into the company. And so, like, for example, I'd say the Ubisoft management team that controls the company, they have no understanding of their end customer at this point. That's the only thing I can conclude just by the content that they put out, because at the end of the day, it falls squarely on them to get the right talent beneath them that then
Mhm.
develops the games properly. And so they're still leading direction. At the end of the day, they get to decide what the direction is, and they do not understand the audience whatsoever. They're very disconnected. So it's like the joke is because it's a bunch of MBAs basically saying like, yeah, I understand. I connect with the average person. I know exactly what they want. I studied it in school. I'm
I
joking,
mean,
but
you have to have what's the where you like get 20 gamers or like 30 gamers together and ask them like, well, what's that called? There's a word for it. Not is it a think tank? Or
yeah,
like, yeah, I mean, but these people think like, no, I'm going to tell you what you want.
yeah. Well, then you have studios that
Focus groups.
yeah, that they worry about the fans, like sort of like a phenomena that's occurring within comics, right? Do you know about the Invincible series, right? Yes.
Yeah, go ahead.
Okay. So there's a huge difference in treatment of the fan base between Invincible, DC, and Marvel. So because it's like newer and more still with the founder's still very active.
Hmm.
It's very much like it shows in from their social media pages. They're very uh, they connect well with their audience. They are really good at generating memes and jokes. I
Hmm.
don't know if you know this, but for example, this is like one example of many. They got the voice actor from Jesse from Breaking Bad in one of the episodes to play one of the characters, and so he is now one of the characters. And then
Oh,
in the show, they got him to say he can't keep getting away with this
that's pretty cool.
in the exact same tone. Stuff like that. It's little things they do all the time like that.
This is
Where
Invincible, you said?
yes, it's
That's the
Invincible.
one where it's Mark as the kid and
Correct. And
yeah,
it's Omni-Man, etc.
Omni-Man. That's yeah.
Correct. And so that's an example of a brand that connects well with its audience. It knows its audience. And it's actually, did you know that the show, which is animated, is hitting the same scores as in terms of audience, like viewership, as The Boys?
Wow.
Like it's actually really big for Amazon. So it's not a slouch.
I mean, like
And mhm,
I had friends, or before I was married, my roommates, they all like to watch anime, and like this kind of falls in a similar bucket. I mean, it's an animated show. I think the only difference is I think it's made in America. I
mhm.
think. Um, like I watched some episodes with them, and I was like, oh, this is like it seemed like a good show, and had a good story and everything. Like it seemed really well done too, so it makes sense.
What's the name of the show again?
Invincible. I'm just
Oh, Invincible. Yeah.
yeah. Like they showed it to me, and I'm not myself. Like I don't watch. If I'm being honest, I don't really watch a whole lot of TV in general. Like uh, the only things I watch is when my wife makes me watch shows with her, like Love Is Blind. Uh, but
This is public streaming. You need to say you like it. She could watch this later. You never know.
she knows I hate it. She knows I just watch it because I love her. Um, and it's like, okay, we'll hang out tonight. But I don't watch. But my friends, they were all big into like anime and that stuff, and I don't know. It seemed like a really good show. I guess I went on a little bit of a tangent. I was just trying to explain. I'm not like an anime person. I'm not a movie person really, but like I watched like Invincible and I enjoyed it.
It's funny because they were going to make initially a live action of it, and then everyone basically, whoever was sponsoring it was like, no, this would never work, because people don't know this, but the Invincible series actually pioneered the evil Superman trope that's now been a little bit overused.
Mm-hmm.
So all of the evil Superman villains that came kind of afterwards, that trope that's being used again and again and again, it was introduced in the modern era by the Invincible comics because of Omni-Man, which is like the portrayal of it. And then the creator, right, he's basically making fun of classic comic books quite a bit. But anyways, so that's an example of like what Ubisoft has failed to do entirely, and a lot of brands have failed to do entirely. It's like the management teams are entirely disconnected from their end consumers, so they lost their way, and then you lose talent too. So it's like what's going to happen with Witcher 4. It's very predictable, because you have the lead developer already attacking the fan base before anything comes out. Yes, it's already getting back.
Red?
CG Projekt Red. And you know who told us this? The Polish people told us this 2 years ago. If you go in the Discord and you go into search logs for like 2022 discussing CG Projekt Red, they were already telling us that the company was losing a lot of its talent and that the next games are going to be bad.
Because Cyberpunk, I felt, because they kind of saved and revived Cyberpunk.
That was no. That a lot of the people were basically already gone or out the door. And you know what? They all went to start their own studio, and they're releasing a game that looks very interesting that will compete in the genre of where Witcher's at, it's like an open world where it sounds really cool. I forget the name of it. It's an open world where you are a vampire.
Oh.
You're a guy who, tries to save his sister or whatever, and then you go to this vampire coven, and then the vampire it's an anti-hero. The vampire actually saves your sister but turns you into a vampire, and then you are in an open world environment where you're fighting this like whatever evil, or not evil king, but like a king that's in raiding your lands, and then your kingdom is falling apart, but then now you're a vampire.
Interesting.
So that team that is developing that, which where I'm getting to the point, is the original CD Projekt Red team that developed all the Witcher games that you like. The new Witcher 4 is made by entirely different people.
Really? Okay.
So
it's kind of like after Halo 3, when the original Bungie team left, and then the following Halos, they never had the same magic.
Nope. It's talent.
Technically, Reach was good. I think Reach was still good, but after that,
yep. It's a business where it's like a lot of that balancing act needs to be done. Like, you see what Rockstar's been able to achieve at Take-Two. Take-Two has done everything in their power to make sure the people at Rockstar are very happy.
Well, yeah, like, don't release GTA 6 for 50 years.
Yeah, take your time with it. Let it cook. Let them cook.
Yeah.
Is literally the motto. But they mess up with a lot of other games, and that's a problem at a lot of these big studios. They have several problems, and then they ruin projects, etc. But that's why it's tough to invest in video games, because it's like it's very barriers to entry are getting smaller and smaller. Okay, so let's see. It's not Twilight. It's not Twilight.
What does Kotaku mean?
Oh, Kotaku? Who said Kotaku?
Caleb.
Oh, Kotaku is it's kind of, I don't really care to read them at all, but I know of them. I don't read any of that stuff. It's like
video game website
reviews. Yeah, they do like reviews.
Oh, he's just saying because we're talking about video games. Okay. Fine. We're moving on.
It was within the context of Ubisoft. Okay. All right, gone. Done with that. ASML. I like it. There's one big fear of this like new China lithography machine. Did you see that?
No, but I have a hard. Oh no, I heard about this, but they're years behind ASML, aren't they?
Yes. So, but if they actually manage to catch up in some way, which they're likely getting unfair fun. Oh, well, unfair. It's not unfair. All is fair in love and war, but they're getting extra oomph from the CCP for sure. Which is always the problem. What the West has talked about. Another Western company won't do it because of how much it costs. Not that it's impossible. It's not the impossibility of it. It's the cost to get there. And so when you're talking about a country like China, it's like if the United States said we want to do it, throw enough money at it, eventually you'll get there. You might, burn insane sums of money to get there, but you probably could get there.
Yeah.
So that's kind of my fear with them.
I don't have an opinion on this stuff when it comes to a lot of the semi stuff, especially fabrication. All that. I just don't have an opinion on that industry.
Yeah. All right, going through the next one. Inflation downwards with the sectors are expected to perform well in the coming months. And could REITs be a strong pick given the potential for lower interest rates? Yes.
Very much so. That's a good thing to be bullish on. I think REITs will do well here.
How have REITs held up, out of curiosity?
Very well.
Oh my gosh, it's finally their time. It's finally their time. After so long. It's been so long in the penalty box.
Yeah, it's finally their time.
I mean, they're still not even fully recovered, but yeah, it's finally their time. But yes, the answer is yes. Okay, so there are two potential hyperscale clients that are working with their own name. We know who they are.
By the way, another industry that's going to do well, and it has been doing well, and another industry we called out in December is pharma.
AstraZeneca, Merck. Yep.
Yeah, those exactly. Imagine if I had been wrong for 2 years straight on an entire sector. He was wrong on something. Pin him down, boys. He was wrong once.
And now that I'm right, I'm gonna only brag about. I'm kidding.
No, you just show only the section you're right from.
Yeah. Well, I'll only show year to date for.
Biotech's been making money. Check out. Go talk to our boy, 100X. Look at the large caps that he likes. They've done very well.
Yes, they have. Wow, look at that. Realty income is 9.51% year to date.
That's probably with a dividend thrown in there, or
a little. Well, they pay every month, so yeah, there'll be a dividend.
Oh wow, yeah. Oh man,
he wasn't wrong. He was like early. Them. Yeah, he hates them because the dividends yield is way too low. It's too low.
Yeah, I understand that. I agree.
5.5% is too little.
Mm-hmm.
Okay, so Copart. Do you know the lore here? I know the lore on Copart. I think Copart lower would be very interesting, but you may not ever get that low because markets. It's like an already discovered high quality company, so the market's like, yeah, this thing's great. We know it's great. Here's a high multiple, but yeah, it's basically round tripped from October, so it's given up its gains. Extreme high barriers to entry, basically right to win. So I like it as a company. What was Slurpee's comment?
Oh, it was a while ago. That's what I was laughing at.
All right, this is a good question.
International boycotts of U.S. companies. Well, who's boycotting U.S. companies?
Wow, Andrew's like dissing you Europeans. I want you to know he's basically saying you guys aren't even relevant.
I legit have no idea what's going on.
Well, I'll say this. I know that there's a content creator on YouTube that's very respected, right? Because he's more of an academic too, and I think he's an emotional weak spot when it comes to Canada.
Yeah.
And he mentioned like Brown-Forman. and like basically they were pulling them off the shelves. But Brown-Forman, as an example, stated our sales to Canada is like 1% of our total sales. So where I'm going with that is, it is the case that for a ton of U.S. companies, the sales, so to speak, from said country are fairly negligible for the most part, in particular Canada. But the opposite is not true. There are lots and lots and lots and lots and lots and lots of companies in Canada that get a good majority of their revenues from the United States.
So, okay, and then someone brought up Tesla. Tesla's good. I don't know. There's a bunch of people boycott. Americans are boycotting Tesla. I mean, but that's my thing. Is it's like I mean, okay, so some liquor gets boycotted, and it's not something I care about. Is there anything like any popular names that are going to really impacted by this?
Besides Tesla?
Tell you what, no one's like going to stop ordering on Amazon.
No one's going to stop ordering on Amazon. No one's going to stop going to Costco. Canadians are not stopping going to Costco. I can tell you that.
They're also going to continue using Google search.
They're going to continue using Google
And
search.
use
They're going to
Microsoft
continue
Excel.
raving on their social media websites that are all American. They're going to continue to use all their software products that are all American. Heck, like their greatest tech companies are primarily basically American companies, and in jurisdiction where they're located, they're Canadian, but everything else is American.
I mean, I don't know. I just maybe I'm underestimating like the level of boycotting that's going on, but I didn't realize it was like that big of a thing.
It's not really noticeable.
Like I have Canadian friends, and it's more like joke now. It's like they're like, "Oh, you dirty Americans!" Yeah, like we're gonna shut your power off. Like, we just joke back and forth. But
wait, let me get this photo.
No, don't do that.
No, it's too much.
It's too much.
Okay, I won't get it. But it was funny.
Yeah.
All right. So yeah, don't really know of anyone's that are necessarily in trouble. Besides Tesla, I don't think people are boycotting iPhones or Androids.
Mm-hmm. The thing is that Tesla's easy to boycott because their cars are.
Well, first of all, it's a big purchase. It's a car.
Yeah.
Yeah.
And there's a lot of alternatives that are just as good.
This is true. In fact, last I checked, did you see what happened with Volkswagen and the Chinese car companies?
No.
So the Chinese car companies were giving Volkswagen a hard time. Volkswagen has subsequently suffered tremendous losses. In an effort to kind of rein it in, they started selling off assets in the EU. Those assets they were selling off were factories. Those factories were being sold to the Chinese car companies. The Chinese car companies were having slightly hard, inconvenienced time with all the tariffs that the EU put on the Chinese car companies. But now the Chinese car companies have an inroad into Europe, and now Volkswagen, which sold those factories to them, will have now continued hard time.
Why will they have an inroad to the EU?
Because they're going to produce the cars inside the European Union.
But why did something happen that allowed them to do that now?
The Volkswagen sold them assets.
Oh, okay, gotcha.
Because Volkswagen was in a stance of weakness there recently. This is all like I think end of last year.
Interesting.
So, yeah. All right, let's see this question. So Block is cheap at 22 times free cash flow, and the management expects to grow at 15% plus gross profit. Yeah, I like Block here, but I think it's gonna fall.
It's just wait for Jack Dorsey to prove that he knows how to run a company profitably. It's my opinion. And I guess I should say run it with a vision. not profitably, but run it with a vision. That's always my concern.
Yeah.
But it does look cheap here for all the assets they have.
Yeah. All right, and then let me see. I think there's like one question left, and then
Oh yeah.
Oh, he has a vision.
Does it make sense? That's the question.
Yeah, it's in something Bitcoin and Bitcoin.
Jack Dorsey's also the person, like, if you saw him on the street, you'd think he's like a homeless. Like, I've seen pictures of him, and I'm like, huh?
There's a Black Mirror episode that has a guy that's supposed to be inspired by Jack Dorsey.
For real.
Yeah, and it's played by that guy from the 70s show. Eric from the 70s show. Yeah, and he like wakes up in his like, you know, house in the middle of like the desert, and it's like a modern pod house, and he's like meditating, and then he's being called by the board, and they're like, "Hey, we need you." And he's like, "I told you not to bother me when I'm out here." And it's supposed to be inspired by Jack.
Dude, it's been a while since I watched Black Mirror. Are they still making episodes?
I don't know. But Netflix is actually coming back down, and it's now at 30 times. Those are cash flows that are probably going to show very strong levels of resistance.
Yeah, I was saying it's on like a list of mine to buy if prices get lower, which could be getting there.
Yeah, no, Netflix is, I pound the table on Netflix. That is a wonderful business that everyone slept on, and now people are like, no. Remember, in 2022, that thing got down to like 15 times earnings.
And it was 12th earnings because this is before all the price increases. This was before advertising got layered on top, because it went down to what, $150?
Yeah. 180, as I remember it. 180, maybe 170.
Crazy thing is, from 2021 to 2025, it's only up 25% from the peak of 21 to today.
Yeah.
But you know, it's all about timing. It's all about what you pay for it.
Yep.
That's why you don't want to buy CrowdStrike at the wrong price. Great business, but what are you paying for it?
Yep.
Actually, CrowdStrike's in the same situation. From their peak in 21 to today, it's up 12%.
So Zabi's comment here. Yeah, I think Evolution's a buy here. If you're looking to get into this name, I think it's a buy here. I know Andrew disagrees with me, but it's having a lot of relative strength in this market. I think their cash flows are going to be fairly resilient in gambling. People are going to gamble. Good time, bad time, anytime, from the comfort of their home.
Dude, they might gamble more in a bad time. They might be like, hey, we got one shot. It's like that guy that sold his car to go. Did he place a bet or go gamble it? Have you seen that video?
Yeah. I think I've shared that meme. It's like he throws it all in black.
Yeah.
Like, I'm tired of being poor.
So when I sold my car and I put it all in black and it hit, I thought it was like I had to pay my rent or something. I can't remember, but yeah.
Yeah. It's fucking crazy people. But yeah, Evolution, I mean, they're doing lots of buybacks now. I shared here. I actually can find it again. Give me 2 seconds to find this. So, yep. Bought back several 100 million shares in just a few days. Well, it's a monopoly money, but you know.
Yeah, I don't know.
Not real US dollars.
How much does it translate to in USD? Out of curiosity.
So the 93 million monopoly money translates to about $2.
Impressive.
So in reality, that's 9 million. So it's like divide by 10. Andrew's like, I'm not impressed, but that's daily.
No, I know.
Yeah. So this is about 9 million USD. That's about 6 something million. It's about 1.2 million. That's about 4.5 million. It's about 2.4 million. That's on daily. Boom, boom, boom. But look at the ramp up. That's actually one of the more important things. It's ramping up. And I think this report happens within the week if they buy back stock. So they report at the end of the week. You get this release.
I got a soft pitch to throw at you for a stock.
Okay. What's the soft pitch?
It's a company with, I think, a pretty loyal customer base. I think the people that use it really like it. Obviously, it's come down. It's trading at a forward earnings about 22 times forward earnings. Its forward growth isn't mega impressive, but it's coming off the back of a 20% growth year last year. They're projecting 5% top line growth this year, I think, with a slight expanding in margins. Down 30% in the past, whatever the sell-off's been.
Okay.
The company is Interactive Brokers.
IBKR.
The only thing I'd be concerned about is like the growth rate on top line and bottom line. Like, I think the issue is, did we just go through like a mega cycle of adaptation? Or if that cycle continues and more people, because I feel like the Interactive Broker core customer is a lot more resilient, or like will stay around in the market longer than a Robinhood.
Yes, it would. And Charles Schwab?
What have they done? Like, what are they at?
They've been coming down. I know that.
Not that much though. 15%. They have so much noise though. Isn't there like a big hole in their balance sheet and all this weirdness with them?
Yeah, but did they really have that risk? Because the management said no. And the market eventually called the bluff. It was like, nah.
I'm just saying, like, there was noise.
Yeah. Well, if rates stay high, they should print. Both of them. Because they're focused. They make a ton of money from just like those cash balances. They're just sitting there and they're just like putting it into the short duration. So IBKR especially.
I don't know how I feel about that.
And also margin is at a high. So they're probably over earning.
That's what I'm thinking, is that there's gonna be an unwinding margin. They're over earning to the point you could actually look at it maybe as a short, but
it's a high quality business.
That's the issue. Is there's so many low quality businesses to short. I wouldn't want to short a high quality one.
Yeah,
but I think they're over earning, and you might.
Yeah.
But, yeah. Someone's been asking us about Misty.
Oh boy, Citizen of the Year. Oh boy, you're just trying to egg us on. Well, last time we said anything, someone.
Oh yeah, someone said that we're stuck up.
Yeah.
Yeah, if you're watching this and you think we're stuck up, go watch another channel. We don't want you here. Go away.
Well, the question is, why are you watching again?
Yeah, why are you watching again?
Stop.
Yeah.
That's very.
You think we're stuck up? Go watch another channel. Leave. Why are you here for 2 hours?
Leave me alone. Leave me alone. Leave Andrew alone. Look. Oh, what am I doing?
Mufasa?
MSTY. So, Yes, is the junk food part of the stream where we say that guy's clapped. Couldn't be me, is what I'll say. Couldn't be me. He literally saw this and said, "No, I'm gonna hold." He was on top of the world. I think his accounts, both of them, were over 200,000 in value together.
He picked 3 of the best stocks you could have picked and lost. MicroStrategy, Tesla, Coinbase. Look at how those stocks have done in the past 2 years.
Well, let's make a new one. So it's what? MicroStrategy, MSTR,
Yeah.
Tesla. So we'll do this.
Just add
Compare
Tesla
it to SLA. And then we'll also compare it to Coinbase.
Sure.
Should I do 5 years?
Well, because he didn't hold it for 5 years, right? He did it like the start of. Yeah, but you can just see the trend there. It's like, dude, you had, and it's more like 23, 24 when you got into them, but like these were stocks that won. Doesn't look as impressive on a 1 year basis, but you can't do like a 2 year view, so it makes it a little difficult. But like these were winners, man, and he found a way to lose with them.
Yeah, well, he picked a structurally challenged product. Yeah, so
and levered as much as he could into it, and yeah, never paid down his margin.
yeah, and I got the photo for everyone wondering how he's doing because we did it. We were following him because he's kind of like the well, I don't want to be that mean, but geez, I was thinking something very mean. I wanted to showcase this. So this is actually the most up to date. This is what it was during the stream, and I should also probably show.
Wait, is that the change in the day?
Yes, that's the daily change.
Ulti was down 40%.
Where's Ulti? Yeah.
No, this can't be right. This
No,
must be over. This must
no.
be all time. Because
No, yeah, that's all time.
NVIDIA is down 32. Okay.
Okay, so then this is another one I wanted to share.
Okay.
This is his account, the joint investing. So when you see his accounts and you see joint investing, this is the one that's 100% personal loan.
What's that now?
He doesn't show this one anymore. So this was from I believe, well, I have the date here, November 10th. So this image is from November 10th. So at one point he was I think positive 200,000 and then is now negative total.
Last I saw that joint investing was at like 76,000, but that was before these sell-offs. So it's because the issue is when you're this levered up, so you have 76,000 of equity with 90,000 of margin. So if a stock goes down 10%, that's a 20% hit on your account.
Yep.
And it goes the other way too if it goes up, but he picked a very stupid way to play this so that he caps his upside. And if you cap your upside and you don't cap your down or limit your downside, it's usually a pretty bad trade. And you go tax inefficient too.
Yeah. Yeah. Well, he's cooked. It's over for him. He this is
I mean, what made Bitcoin rallies back up to 90,000 tomorrow? I find that very improbable, but
well,
never
now
say
he has to do something. And I know that Robinhood gives him 3 days.
He said he has till Wednesday.
Yeah. So, yeah, it'll be 3 days, and this deficit could increase by quite a bit.
My guess is that we could have a bounce. I mean, we have no idea. Tomorrow you could have a bounce. Who knows? The issue too is, so he's got to sell 8,365 equity. So does that mean he has to sell like 16,000 of stock?
Yeah, give me a second, because I'm also calculating his margin in his other account.
From 30K club to 13K club. Oof. Yeah, he lost pretty hard there. Like, this guy's already lost, and now he's losing more.
So 20,000, 14,000. So yeah, that will be
LPLA was. Is that LPL Financial? Well, I'm curious, why do you think LPL Financial's screwed in that scenario? Aren't they mostly like an asset manager? Like they just a
this can't
group of
be
mutual
right.
funds?
Andrew, he's so margined in this account. He's dead in this account. This account's dead. The joint account.
Why?
Oh my god. I didn't do the math at first. Do some math for me real quick. Mental math. Just the first position. Misty. What's the value of that?
120,000? Más o menos, correct?
Yeah.
Then you add 17,000.
Yep.
So you're at 147. Then you add another 14. Then you're at, what was that before? 147.
Yep.
You're at 161.
Yep.
Ulti, another 10,000, 171. NVIDIA, this one's 4,000. Nah, it's a little more than that. It's like 4,500. Yeah, so he's close to like 180, 190,000.
Yeah. This is, of course, the peak. That's why he doesn't show this. This account is dead because Misty is halfway down. It's like cut in half. So he's already lost 60,000 right there.
Coney's more than cut in half.
There you go. That's another 8,000. So we're at 68,000.
Tesla's cut in half. And Ulti's down 40%.
So he's down to maybe like 50,000 in this one with just I think it's like 100 some odd thousand in debt to fund this account.
Oh, and didn't he take some of the proceeds from this to do a Cybertruck loan?
Huh?
How is he paying for the Cybertruck?
Oh, I forgot about that. He has a higher car payment than me. I don't even know, man.
This man is margined in his whole life. Like, he has a personal loan to take out margin on these products. Then he has a Cybertruck loan. He's like blowing up. Like, this guy should be the new face for Wall Street bets. Except he's too stupid. It wasn't even like a fun bet, so never mind.
Elemental says with over 88K borrowed in his main account and an account value of less than 40K, he has well over 3-to-1 leverage on margin. That is so true. This man is like hypersensitive to market moves right now.
But he's backed into a corner, right? That's why, you feel a little bad laughing, but then you don't, because you remember when you tried to go and help them and they banned you. It's kind of like when I go to other servers, I try to tell people, hey, like, you like this stock? Have you thought about this? And they're like, rah, 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 and they get mad. I'm like, okay, hope you lose all your money. And then I ping them and say, hey, the stock's down 50%. How are you feeling? And then they're like, he's mad or he's mean.
Ban him. Yeah.
So, but he was feeling the walls close in, and he was talking over the weekend. He's like, oh, because he realized it on like the first couple margin calls where he had to pay out. And he's like, I'm going to pay down my margin. But like, it's too late. It's almost like that, like a cartoon where it's like, "Oh no, I love play good," and it's like, "It's too late. You've been bad." And over the weekend, though, he, um, over the weekend, he's trying to figure out how to get. He knows the walls are closing in. He's trying to figure out a way to get out. And he's like thinking, he's like, maybe I can buy puts on Misty. And I just started laughing because options are 100% margin requirement.
Mhm.
And I knew it was going to be a margin call just based on the price action of Bitcoin. And he knew that too. Like, you're in a margin call. You're not going to be able to buy options. You're going to be selling things.
Nice.
And I think he decided, no, it's better just to pay down the margin debt. And then he was like, someone was like, well, maybe you can move your account to Interactive Brokers. I hear their margin requirements lower. He's like, that's a good idea. And then the guy's like, but if you go into a margin call, they just sell your stock without telling you anything. You could tell he like paused. He's like, shit.
It's over. All right, we got an interesting question that came in.
Well, congrats on being rich, first of all. You've been building cash for a few months and have 600K ready. Well done. So, props to you. Okay. I'll give my opinion. Actually, no, you give your opinion first.
Well,
Put it all in Misty. No.
well, we don't know how old the person is. That's the
True.
problem. And I don't know their income.
My general advice kind of runs the same, but go ahead. Either way, I think.
I mean, if you do 45. All right, that's 45. We're strangers on the internet. You can say your income. No one is gonna know. As soon as we get off here, Andrew's gonna stalk you. No,
I have a very good biz that generates a lot of money per month.
Oh, then my advice changes at that point. So I think Andrew might disagree with me here, but whatever it is you decide to buy, index funds or individual stocks, I think you find the ones you like, and I think you start buying here little by little. You're not going to catch the bottom, but you're going to kind of get into some sort of bottom. You basically create your shopping list, like what Andrew's been doing. You create your shopping list, start buying those names, and try to like run out of cash in 600K, and that's your starting amount. I'm assuming there's no other stocks that you said you sold all your stocks. So run out of cash in like 12 months or less, maybe a little less.
Very, very similar to what I was going to say. So first of all, don't know if you're into buying single stocks. My advice is, if you're making this much money, you don't need to be. Like, just eyeballing how much money you're saving a month, you probably are better off like focusing on your business than focusing on stocks. So I could be wrong on that though. Like I said, stranger on the internet. I would look at, and I did the same thing. So my parents came to me a while ago. I'm not going to say the dollar amount, but they had a big chunk of cash. Now, the difference is, this is a chunk that they couldn't just replicate easily. And my dad said, well, what should I do with this? Like, I got this big chunk of cash and I want it to be invested. And I said, okay, set a 2-year time horizon. And I would just buy, like, break up, like you said, set about 24 months, buy into the S&P 500 or an all world index. Sometimes when I feel like if you're making this much money, like, go MSCI all world or something. But once again, that's totally up to you. But kind of stagger it over like maybe 24 months, because over that time you'll catch the top a little bit, catch the bottom, but I think then you'll come out and you'll have a good basis there. I wouldn't say just shoot it in all at once or anything. I think you stagger this out over a long time period. And so that would be my opinion, which is similar to what you said.
Yeah. And if you're saving 600K, if I was reading this correctly.
Yeah, I mean, unless they basically save 600K in a few months, if I'm reading this right. So let's say $200K a month.
No, but okay. I actually say they're in a special position if they're doing that. I think they can afford a bit heightened aggression. Sorry, 50K a month. Yeah, you're in a special position. You're saving 50K a month.
600K is still a pretty big chunk then. That's a year's worth of.
That's nothing. It's 1 year.
Year's worth of savings is nothing.
Yeah. I view like if you're starting to get like several years worth of savings.
Okay.
That's starting to be problematic. Or where you have to be like, oh, okay, hold on here. But if it's a year's worth of savings, I think he can afford to be aggressive. I mean, I'm thinking for myself, if I'm in his position with a 50K savings rate, 600K, so a year's worth saved up. I think you can afford. You're in a great position where if like the dip keeps dipping, you're throwing 50K at the dip a month, and a year, 2 years from now, I don't think the market's like.
I mean, there's a lot of things I don't know too. What's the job and what's the predictability what's the business and what's the predictability that this business will be able to sustain the current savings that he has, or is there money you can invest back into the business that even grows that? There's a lot, but general, if we're saying we're just going to put this into stocks and we're not going to ask those other questions, I say spread it over 12 months, but
Yeah.
put 100. Basically, you're putting 100K in a month. Then you're going to put 50K in from this, 50K from your salary.
And this is the only literal financial advice I'll give you listening. Everything else, I'm not telling you what stocks or anything like that. It's just broad strategy. But all the cash that you don't have invested, no savings account, none of that jazz. Just same brokerage account or separate brokerage account, however you mentally like it, and then just chuck it all into SGov.
Yes,
or V-bill. Yeah, like literally, that's the only actual financial advice I give you. Just throw all of that into SGov, V-bill, or any equivalent. T-bill is another one. So yeah, if you just chuck it into that, and then just like do that, whatever not distribution, but whatever like deployment cadence you like, that'll be great.
We ask the questions. You're not humble bragging or anything, Blue Chip. This is just needed information.
And yeah, exactly. Because that's the only way we could answer your question is we knew this information. And then with like how I would view it for myself is like the make sure you in your brokerage, some brokerages automatically do it, but in your case, like of course keep track of your distributions because that's gonna be taxable. And it's gonna be a healthy chunk of change. Like just on its own, you'll get a decent amount of interest each month. And I don't know how you want to do then the new 50K coming in, because maybe he can do what was that, like where'd you get the 100K from a month?
If you take the 600K and you do 50K a month, then you take a 50K a month from your your savings that you're doing. So basically you're putting 100K a month in total.
Yeah, so he'll have 1.2 mil by 1 year.
Yeah, plus or minus wherever the market's at.
Yeah, market's going down 70%, so he'll have like a couple 100,000.
If that happens, this guy's gonna come out at 50 and be like, okay, well, T-bill is the ETF. He's saying either do T-bill. I'm gonna put the tickers in it's TBIL, right?
Yeah.
Either of those should be fine. You could also do Box, right?
Oh no, well, depending on the brokerage, Box will be the most tax efficient one if your broker allows you to buy it. And then there's V-bill, that's the Vanguard one, has a slightly lower fee than SGov.
Is it BOXX?
Yeah, BOXX.
And to be honest, like any of these will be fine.
Yes.
Yeah. Forward to J and K.
So BOXX, I'll talk about them real quick. So, and I'll put them all side by side. Actually, I shouldn't put them all side by side. We'll talk about them individually. But BOXX, there's no interest payment. And so it literally is a product that will just go up and to the right forever. But it will replicate the yield of a treasury, but it won't pay out a distribution. So since there's no distribution payout, it just goes up and to the right. And in effect, it's a fairly tax efficient way to get, a savings return. And then SGov, by contrast, is going to give you the following. It's going to look like this. I'll save you the effort and time and just tell you, please do not try to time the top and the bottom. It doesn't matter. It literally does not matter when you buy and when you sell, because if let's say you buy it here and then you sell here, you won't get the interest, but you got the implied interest from the day you bought to the day you sold. And then same thing here. If it goes down and you sell it here, you didn't lose any money because you received the interest. So all this is literally noise. So it literally does not matter when you buy or when you sell. You just buy this thing, and it's a savings account replacement. So every family member I've basically forced them in one way or another to just put their savings into a brokerage account at their same bank and throw it into SGov or some equivalent. There's a bunch of equivalents. That is actually funny. Clombodian's comment is pretty funny. Box is greater fool theory. It will never pay a distribution. Beware. Yeah. But yeah, I like Box. My broker doesn't let me buy it. I almost want to have now a separate brokerage account for savings just to buy Box. Yeah, Merrill doesn't let you buy it.
Why?
I don't know. They also don't let you buy V-bill. An ETF has to be around for a certain period of time for them to allow you to buy it. I'm going to do? I'm going to actually call them and keep making the request that they make it available. And if I complain enough times, maybe they'll finally do it. But yeah. All right. So I think that covers all the questions. We've been live for 2 hours and 30 minutes. So I hope you guys enjoyed the show. If you guys are curious about joining the Capital Mindset Club, seeing access to all of our portfolios, all the analyst portfolios, there's one more analyst aside from us, and as well as our write-ups, pitches, and chat with us pretty much on a daily basis. The link is in the description below. That is our sponsor, which is ourselves. And aside from that, if you, all 279 people watching here today on whatever platform you're watching, feel free to like, share, subscribe, retweet, or repost, I guess is what they say now. And comment afterwards to let me know how you guys felt about the show. Other than that, we'll be seeing you guys. What? Sorry?
And how stuck up we were.
Oh, yes. Don't forget to say that. Don't forget to say that. All right. And no worries, Blue Chip. It was a pleasure to answer your question. Yeah. I'll see you guys.